What if I told you that the very bank account you're using right now might actually be costing you money without you realizing it? And that there's another option out there, one that not only saves you money, but could also give you better rates, more flexibility, and even cash back in your pocket. Today, we're going to break down the world of credit unions. By the end of this video, you'll know exactly why millions of people are switching away from big banks and choosing credit unions instead. But there's one huge advantage. Most people don't even realize credit unions offer, and I'll reveal that later, so stick around. Number 1. What is a credit union really? Let's start with the basics. A credit union is like a bank, but with a twist. While banks are owned by shareholders who want to make a profit, credit unions are owned by their members. That means if you open an account, you're not just a customer, you're a part owner. And here's the kicker. Instead of profits going to outside investors, they get reinvested back into the credit union to benefit members like you. For example, instead of paying higher fees, you might see lower loan rates or higher savings account interest. Imagine your neighborhood grocery store decided to split profits among loyal shoppers instead of big investors. That's basically how a credit union works. Number 2. Lower fees that save you money. We all know banks love fees. Overdraft fees, maintenance fees, ATM fees, you name it. Credit unions, on the other hand, usually keep fees low or cut them out entirely. For instance, while a traditional bank might charge you $15 a month for not maintaining a minimum balance, a credit union often has free checking with no strings attached. Over a year, that's $180 back in your pocket. For someone living paycheck to paycheck, that's the difference between stressing over bills and having a little breathing room. Number 3. Better loan and credit card rates. Here's where it really gets interesting. Credit unions are famous for offering lower interest rates on loans. Need a car loan? A bank might offer you a rate of 8%, but a credit union could bring that down to 6%. On a $20,000 loan, that saves you about $20 every single month. Over 5 years, that's more than $1,000 in savings. Even with credit cards, credit unions often keep interest rates a few points lower than banks. That means if you carry a balance, you'll pay less in interest and more of your money will go toward actually paying down your debt. Number 4. Higher savings account returns. Credit unions don't just help you save money on loans, they also help you grow your money faster. Because they're member-owned, they often pay higher interest on savings accounts and certificates of deposit. For example, while a national bank might offer you a sad 0.01% on savings, a credit union could pay you 0.50% or even 1%. That might not sound huge, but if you keep $10,000 in savings, the difference adds up over time. You're essentially earning more just by choosing the right place to park your cash. Number 5. Community-focused service you can actually trust. Have you ever felt like a number at a big bank? Credit unions flip that around. Since they're usually smaller and locally based, they focus on serving the community. That means friendlier service, easier access to decision makers, and financial products that are actually designed for the needs of people in your area. For example, some credit unions partner with local schools to offer student-friendly loans or help fund community projects. That sense of belonging and trust is something a lot of people feel is missing from traditional banks. Number 6. Easier approval for loans when banks say no. One of the most overlooked benefits is that credit unions are often more flexible with lending. If your credit score isn't perfect, a big bank might shut the door on you. A credit union, on the other hand, might take the time to look at your entire financial picture instead of just a number. Maybe you've had a rough patch, but you're back on track. They'll consider that. This can be the difference between driving away in your first car or being stuck without financing. Number 7. Access to nationwide ATMs and shared branches. Here's a big myth. People think credit unions are small and inconvenient. But did you know that most credit unions are part of a huge shared branching network? That means you can walk into another credit union across the country and do your banking there, just like it was your own. On top of that, many credit unions give you access to thousands of fee-free ATMs nationwide. So if you're worried about convenience, credit unions have already solved that problem. Number 8. Extra perks and member benefits. Credit unions often offer unique perks you might not expect. Some provide free financial education classes, credit score monitoring, or even discounts on insurance and travel. For example, many credit unions partner with car buying services to help members get better deals on vehicles. Others offer scholarships for students or holiday savings clubs to help families prepare for big expenses. These extras may not sound flashy, but they add real value to your financial life. Number 9. More personalized customer care. At a big bank, it can feel like you're just another account number. At a credit union, the staff often know their members personally. If you walk in with a problem, you're more likely to sit down with someone who genuinely cares about helping you solve it. Imagine needing a loan extension because of a temporary job loss. At a big bank, you might get a flat no. At a credit union, you might get a conversation, understanding, and a solution that actually works for you. Number 10. You're not just a customer, you're an owner. Here's the part one promised earlier that most people don't realize. When you join a credit union, you actually become a part owner. That means you get voting rights. Each member has one vote, no matter how much money you have in your account. You get a say in how the credit union is run. Compare that to a bank, where only wealthy shareholders control decisions. With a credit union, it's truly about democracy in finance. Your voice matters. Number 11. Safety and insurance you can count on. Some people worry, are credit unions even safe? The answer is yes. Just like banks have FDIC insurance, credit unions have their own version called the NCUA. This protects your money up to $250,000 per account, per member. So even if your credit union went under, which is extremely rare, your money is just as safe as it would be in a bank. Peace of mind is priceless, and you'll have it with a credit union. Number 12. Who should actually choose a credit union? So, are credit unions for everyone? Not always. If you travel constantly and need physical branches everywhere, a big national bank might make more sense. But for most people, students, families, everyday workers, a credit union offers better value. If you're tired of high fees, low returns, and feeling like your bank doesn't care about you, then a credit union could be your best move. Number 13. Lower minimum balance requirements. At many big banks, you're forced to keep hundreds or even thousands of dollars in your account just to avoid monthly fees. Credit unions usually drop those minimums way down or eliminate them altogether. For example, you might open a credit union savings account with just $5 or $10. That makes it far easier for beginners or people rebuilding their finances to start saving without feeling punished. Number 14. Profits return to members, not Wall Street. Banks send profits to shareholders, who are often far removed from the customers. Credit unions send their profits back to members in the form of lower loan rates, better interest on savings, and fewer fees. Think of it like joining a club where every dollar you spend on services helps improve benefits for you and the other members instead of lining the pockets of investors you will never meet. Number 15. Stronger sense of community support. Credit unions often sponsor local events, donate to schools, and run programs that directly benefit the neighborhoods they serve. For example, some credit unions offer financial literacy workshops for teens or provide grants to small local businesses. By banking with a credit union, you're indirectly helping your community thrive, not just padding the bottom line of a corporate bank in another city. Number 16. More flexible financial products. Because credit unions are member-focused, they often design products tailored to specific needs. This could mean specialized accounts for students, first-time homebuyers, or small business owners. For example, some credit unions offer holiday savings accounts that automatically set money aside for end-of-year expenses. Others create unique mortgage options for people buying their first home. Number 17. Lower overdraft penalties. Banks make billions every year from overdraft fees. Credit unions generally keep those fees much lower and may even offer overdraft protection that links to your savings account. Imagine accidentally overdrawing by $25. At a bank, you might pay a $35 fee. At a credit union, you might pay $10 or less, or have the money automatically transferred from your savings with no penalty at all. Number 18. Personalized financial counseling. Many credit unions provide free or low-cost financial counseling services. This means you can sit down with someone to build a budget, repair your credit, or plan for retirement. 4. Beginners who feel overwhelmed by money management. This guidance can be a game changer. Banks rarely offer that kind of personalized support without charging you a hefty fee. Number 19. Lower mortgage closing costs. When it comes to buying a home, every dollar counts. Credit unions often have lower fees for things like loan origination, application, or closing costs. That could save you hundreds, or even thousands when you sign the final paperwork. For a first-time homebuyer, this makes homeownership a lot more accessible. Number 20. Friendlier credit card policies. Credit union credit cards usually have fewer hidden fees. Many don't charge balance transfer fees or annual fees. They may also offer more forgiving terms if you miss a payment by accident. For example, instead of slapping you with a $39 late fee and a massive interest hike, a credit union might give you a short grace period and a smaller penalty. Number 21. Easier access for younger people and students. If you're a teenager or college student just starting out, credit unions are often more welcoming. They might let you open an account with little to no credit history and provide beginner-friendly products like low-limit credit cards to help you build credit safely. Banks, by contrast, may turn you away until you meet strict requirements. Number 22. A voice in shaping the future of your institution. Unlike banks, where your voice doesn't matter, credit unions give you a say. Members can vote on board members and policies, and sometimes even run for a board position themselves. This means you have a real influence on how the credit union operates, whether it's expanding services, improving technology, or adjusting fees. Imagine this. You're saving more money every month. You're paying off your debt faster, and you're working with an institution that actually cares about you, not just your wallet. That's what a credit union can do for you. So now the big question is, with all these benefits, why wouldn't you at least explore joining one? Have you ever thought about switching from a bank to a credit union? What's the biggest thing holding you back?